Welcome here, ladies and gentlemen. This is another video in this playlist, which is all about synthetic indices. Now, there are so many synthetic indices, just as we've noticed, there are so many of them. And since there are so many, you might be finding it difficult to focus. But as a good trader, you need to choose some to focus on, to practice them, get good at them before you can fund life, right? What we'll be doing in this video, I will tell you the best synthetic indices to trade, based on your strategies, based on your style of trading, your experience, the best times to trade them, and I'll also give you a reason. I'll tell you why. That being said, before we go on, I want us to do the YouTube business. I'm sure you know what the YouTube business is all about. I need you to subscribe if you've not done that. I need you to like this video so the algorithm can push more persons to see it, and drop a comment on the next video you would like me to make. And so if you have done that already, let's go on. So best synthetic indices to trade. There are certain indices that, based on history, based on the experience of traders, they give better results, right? Depending on your style of trading, whether you're an SNC trader or ICT or price action trader or triangle of analysis, whatever style of trading you use, these indices, they have style of trading that they tend to move towards, right? So best synthetic indices to trade. I also tell you the best time to trade them. Yes, synthetic indices are available 24/7. They're available 24 hours a day. You understand, 7 days a week, right? You can trade them anytime. However, based on what we call the volatility of other traders, right? The availability of other traders as well. There are times that it is better to trade them. There are times when traders have noticed better results, right? I'm also going to tell you why. So with that being said, if you have missed out on other videos, let's say this is the very first video you are jumping on about synthetic indices, you can just simply check the description of this video, check the description. You see a link that will direct you to the very first video that we started with this playlist, a video where I explained the meaning of synthetic indices, the groups and everything. I compared it to normal forex trading, right? And if you are wondering how exactly you can create an account to start to place trades on synthetic indices, check the second video in this playlist. Yeah, check the second video. The link is also in the description. As you check it, you will know how to create an account and how to place trades on synthetic indices. So, assuming everybody has already been brought to terms to what we are doing, I'm going to dive in. So, one of the most common synthetic indices is Volatility 75 Index, right? V75. So why it is popular is because it is highly volatile, high volatility, and of course that means high profit potential, right? Then there is clean technical structure. That is one thing, trends, ranges, and the likes. So it is ideal for scalping, it's ideal for swing trading as well, and it's also good for your price action strategy, right? So that is exactly why we use the Volatility 75 Index, because it is very popular. You can see the reason why. So you can trade it 24/7. However, you want to avoid the low volume times such as early Sunday. Yeah, I mean, it is available that time to trade, but it is low volume because traders want to enjoy their weekends. Some persons need to go to church or just rest on a Sunday, right? The peak times to trade, the peak volatility times also mirror the regular market rhythm, which is around 10 a.m. to 2 p.m. GMT, right? So that is usually the peak times for Volatility 75 Index, because that is when most people want to work. That is when most traders want to trade. I mean, traders can trade anytime. But what we've realized is that traders want to trade around 10 a.m. to 2 p.m. GMT, right? Because so that is when you want to get the best volatility from V75, right? So it is best for advanced traders, for those momentum and trend followers, even for price action traders. So this is the third video in this playlist. Like I said, in the next video, I'm going to cover some strategies you can use to trade synthetic indices. So stay tuned, which is why you need to subscribe and turn on your notification. Stay tuned. I'm going to apply certain strategies on it and the likes. Okay. However, if you want to get a complete training that contains everything about trading and deep into the strategies, there is also a link in the description for the training. So that being said, let us dive in. So the second one is Volatility 25 Index. Now the volatility indices, they are very common. I just need to put that out there, but the most common are the V25 and the V75. Now, that's lower volatility than V75. So this is why it is good for beginners. So if you're a beginner, if you're just starting out, I would advise you focus on V25, right? I would advise you focus on it. It has lower volatility, more controlled movement, and is ideal for you as a newer trader. Well, I know that you might be an expert in the normal forex trading, Euro USD, gold, silver, GBP USD, odd card, the normal forex trading. You might be an expert there, right? But when you come to volatility indices, I will always advise you to start from V25. You want to start from this one that has lower volatility, which is meant for beginners, right? You want to start there because you are an expert in a different section. This becomes a new section you want to move gradually. So like I said, in the next video, I'm going to talk about strategies and the likes. I will also cover support and resistance and all those things. So I'm going to do that in the next video, right? So now when to trade it, you can trade it anytime, but yeah, early weekdays offer smoother price action because there are other traders, right? Because other traders are also active. During the weekends, there's low volatility, just as expected, okay? So the next one is the boom 1000 and the crash 1000. Now, from the word boom and crash, you already know. The boom 1000 is usually having upward spike. Yeah, so it's great for you to catch buy entries. Crash 1000 is great for you to get sell entries. Now, it doesn't mean you cannot sell in boom 1000 or you cannot buy in crash 1000. However, you need to understand what is expected, right? What is expected. So it is very tradable using price action and SMC or ICT if you may. You can trade using these methods for them. So the best times to trade early in the morning and evening. Now, boom 1000, crash 1000, they are very good for evening. You want to avoid flat markets when the spikes are rare. You want to avoid those types of markets, and that's because you will not be able to make money from it, right? So it's best for traders who scalp. Yeah, quick in and out trade using spike logic. You don't want to swing on boom 1000 and crash 1000. You understand? So that being said, let's go on. So step index is very, very unique. There is constant volatility. It's not high, it's not low. It has a stable market. Now it's good for new traders, right? And for you to test your new systems, your patterns, risk averse scalpers. If you do not want to risk much, you want to try step index, right? So it's a very stable market. This is one of the indices that you can trade anytime, it is advisable for you to trade it anytime, right? Because it is quite stable. So that is that for step index. I'm still going to show you, although in the previous video I showed, like I said, how to create an account, how to view the chart and how to trade it, how to trade synthetic indices. But after these slides, I'm going to go to the chart, show you how to see all these pairs, you understand? And if you don't know how to create an account and place trade, you can check the link in the description. You definitely see how to create an account and the previous video that you missed. So jump indices, this is good for both developers. So there is constant jump every second. Unique volatility pattern is volatile. It's great for algorithmic trading and scalping. It's great for that. So scalpers and those who use bot trading, right? Those who use bot trading. Usually I advise you use the normal style of trading, you yourself analyzing properly and the likes. But there are certain bots that can be good. Yeah, there are certain bots that can be good. I'm going to look into them, and if I see any, I'm going to recommend anyone that is actually good. However, jump indices, they are good for both developers and fast scalpers. Jump 10, jump 25, they are two good ones that you can check out, right? That being said, let's go on. So let us now talk about the best times to trade. We've already talked about this, but let us stabilize it. So although synthetic indices, they trade 24/7, like I said, anytime you open the chart to place trades, you will be able to trade on synthetic indices anytime, right? But there are so many of them, which is why we need to focus and tell you some that are best depending on your style of trading. If you swing like me and you can use price action, SMC, ICT just like me, then you might want to avoid the type of pairs that make you to scalp, right? Pairs like jump indices, you want to avoid them, right? Boom and crash, you want to avoid them, right? But if you scalp or if you're somewhere in between, yeah, you can try boom and crash, you can try step index. You understand? You can also try if you're a scalper and a swing trader, you can try the volatility, right? So that is why I decided to focus, give you some focus to work with. Okay. So although synthetic indices trade 24/7, the optimal trading conditions often mirror human behavior, right? Our cycles, the times we want to trade, that is usually the best time to trade, right? So it is moving with the sessions. I'm sure you know the sessions. We talk about the Asian session, or some persons will say Tokyo session. We have the New York, we have the Frankfurt. Some don't like to include it. We have the US, right? So trading sessions, you can go to Forex time zone converter like that to see the sessions, right? So when these sessions are open, most of these pairs tend to trade better, right? So around 5 to 9 a.m., this is GMT. I'm sure you know which time zone works for your country. If you are in the United Kingdom, it's GMT. You understand? In certain other country, GMT +1, -4, +2, like that. If you know which one is for your country, you could just check Google. What's the time zone in GMT for blah, 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 right? So 9 a.m. to 2 p.m. London session, right? The London session. 6 p.m. to 9 p.m. is US evening activity. The US session usually starts around 2 p.m. To 10 p.m., right? So 3 p.m. to 10 p.m. Sometimes it's plus or minus 1 hour, right? For the opening and the closing. So around 3 p.m. to 10 p.m. we have the New York session, which is the US, right? So it's another good volatility window. However, on Sundays we have the slowest narrative. It's best for you to avoid 2 to 5 a.m. Then around 10 a.m. or let's just say 12 p.m. on a Sunday, most traders are now available to trade. Those who went to church are back. Those who are watching shows or just relaxing, they probably got bored and decided to open your chart. So you get a little bit more volatility from around 12 p.m. Sunday. But any other early hours before then, you might want to avoid the market, right? That being said, let us look at best indices by strategy and trader type. It's very important. So if you're a scalper, you want to look at boom and crash and then step index. This is good for you to scalp with, right? I mean, you can also use others, but these tend to give you very fast this thing. Maybe you can even use jump, right? Can you even use jump? We said that, but you have to be a fast scalper. That is not really something people want to hear, right? So that being said, then if you're a swing trader, yeah, you can use volatility 25, volatility 25, right? Good movement, a little bit stable, not so fast, especially for volatility 25. Algorithmic or both trading, then jump indices is where you want to be. Step as well is also where you want to be. So as a beginner, here you can do step. Most beginners scalp anyways because of lack of patience, right? But as a beginner, you can do step indices. You can do live like that. So SMC, ICT trader, boom and crash is nice range. But even volatility, you can practice your SMC, ICT on there because I mean it has a lot of relationship with price action, right? So V75 with price action traders, crash 1000. And like these are some that you can focus on. I mean, there are also the basket indices, right? There are so many. Like I said, there are the derivatives from the normal forex. So those ones are not usually available during the weekend, like that. So the next thing we're going to do is go to the charts, look at some of these pairs, look at some of them. Like I said, if you don't know how to place trade on MT5, check the link in the description. I'll show you how to create an account There's a video to guide you how to create an account and also to log in that same account to MT5, right? So that being said, let us look at some of the listings on the chart. Here we have a chart on the synthetic indices. Like I say, all you need to do is go to your listing and type TradingView, tradingview.deriv.com. That's it right there. As you click on tradingview.deriv.com, it takes you straight to this. Of course, yeah, it takes you straight to this, as you can see. You can click on this place right here to search for whatever symbol you want. Let's delete this. Now there is Forex, there is stock indices, commodities. You understand? Of course, this is not the normal TradingView, which is why we went through tradingview.deriv.com. So once you click on it, it takes you to, you can see so many, right? So we have the jump, we have the boom, the crash, there's boom 900, 600, 500, 300, so many, right? Where's the basket? We have the basket. Like I said, this basket, they are derivatives from the normal Forex. We even have the normal derivatives, right? You understand? So there are so many, which is why I've told you some which you can begin to focus on. I believe they're adding more and more indices like that. So this is, as you can already see, Volatility 25 index. This is what I say you can begin with as a beginner, somebody with wanting something a little bit more stable to start with. And with that, you can go on to practice with it. This is on 1 hour, right? This is on 1 hour, and very, very simple stuff. You can see how very straightforward this is, right? We're looking at 24 hours earlier, and we have what we could see as a supply zone, right? We have right there what we can see as a supply zone. We go there to mark the area that the market tapped into. Okay. And of course, if we had seen it tap earlier, from there we could go on to lower time frame to go on to get some entries and analyze, right? So this is an example of what I'm telling you. But anyways, we'll not be getting into any strategy right here. I just wanted to show you some of the best pairs that you can focus on and why. Let's look at some of the boom. See what exactly we can get from there. We see that the boom is typical for both trading and fast movement, right? I hope I'm not beginning to forget some of these things, but that is why I created a list, right? That is why I created a list, and from there, I'm sure with that list, you can always have it. Maybe you can even take a screenshot of the list to work with, right? Can even take a screenshot of the list to work with. So with that being said, we said earlier that the boom and crash, they have these spikes upward and they have the spike downward. Yeah, so we are looking to scalp when we use the boom 1000, crash 1000. It's very important. Boom 1000 is not the same thing with boom 500. Very important. So, and we are looking to buy in a boom and not to sell. Although you can see sales there, but it is not ideal, it's not typical, right? It's very important you have that at the back of your mind, right? So we can see that there was a lot of sell at this point, but it is not typical. Very, very important. Okay. Now, usually you will notice more of the spikes on the lower time frame. As we go down to lower time frame, that is exactly where you will notice more and more of the spikes, right? So there you go. You can see the spikes, right? Upward movement, right? So this upward movement. So when you are looking to place a buy, you understand, on the lower time frame, and then you can begin to take note of certain key levels, whether they hold or not. Some of them will hold, some of them will not, as expected, nothing is 100%. You already know that some risk come with trading. You understand? So when you start to notice these spikes, you will know how exactly you are meant to enter the market. Sometimes they might tap into a zone, sometimes they might not. Right? It's very, very important for you to have that at the back of your mind. So I just wanted to show you some of these things, like I said, and the spikes, it is easily seen on the lower time frame. However, if you are on the higher time frame, you will not take note of the spikes. That is, everything just accumulates, right? Did I choose boom 1000 again? Yeah, I wanted to choose crash 1000. Yeah, I wanted to choose crash 1000. So that you can see that on the lower time frame on crash 1000, we are looking to enter a sell. You understand? You can see that the sell is so fast, which is why the term crash. The same way the buy was so fast on boom, right? From the word crash, you can see it. It just crashes, right? It just crashes. So you want to avoid markets where there are no spikes. Like I said, please, you don't want to get involved here. But the moment the market starts giving this movement, understand, you see this as a demand zone for the market to get into and come down. Do you understand? So that is just it. Let's look at some of the steps. So once again, if you are asking yourself, how exactly do I place a buy or sell or this thing? Like I said, you need to create an account with the broker. I've talked about how to create an account in the second video in this playlist, but you can check the link in the description. You will see the link to the video on how to create accounts and actually place trades. So today is a Saturday. So you can use this opportunity to start to practice on synthetic indices. But hey, if you are not bothered about synthetic indices, or if you are watching this video later on, I mean, it always be available. Maybe the next time you watch this video, by the time you're watching this video, we'll have up to 500 synthetic indices, right? We'll have up to 500. Who knows? So, like I said, there are so many of them. I was looking to get some of the step indices or the jump. Let's look at the jump. Let's look at jump 10. So now this looks more or less like a normal chart. You understand? This looks more or less like a normal chart, but there are also other jumps, 25, 50, I think like that going down. And then we're saying that jump has unique volatility pattern. There is constant jumps every second, right? There is constant jump every second. It has unique volatility pattern. So it's great for both, right? The jump indices, we said, is great both developers. Jump 10, jump 25, and that is why I wanted us to look at jump as well, right? We'll go down to a minute. It depends. Sometimes if you want to go to lower time frame, you'll probably be asked to get premium, and this is just sample this thing that I'm using. But anyways, this one is okay. And yeah, there you have it. So there is constant, it is a little bit more constant, and that is why we can use it for both trading, right? Even from this place, you can change. You can check and change so many others, right? Check and change so many others. Most of these markets are open. So there you have it. I do not want this to make this video unnecessarily long, but I'm sure by now you've been able to learn a thing or two about the synthetic indices you should focus on and why. The best times to practice with them as well, right? The best times to practice with them, the time to focus on, depending on your goal, your trading goal. So if you are a scalper that is just looking to make quick gains from the market, scalp little there, little here, then you know the ones to focus on by now. If you are looking to swing, then sure, you also know the one to focus. So thank you so much. If you have not subscribed, once again, do the YouTube business. Subscribe to the channel so you get to see more things from me. Notification, the next video I upload, you'll be the first to know about it. I want to see your comments. Let me see what you think about the video and what next you want to learn. I said the next time I'm going to upload a video where I'll do some little analysis in order for you to see that, then you have to be subscribed, right? You have to be subscribed and turn on your notifications so you get the video, right? Maybe I'll upload it during the week or next week, Saturday or something. But I'm definitely going to add it to the playlist, and I want you to be a partaker of it, right? So that being said, if you have any other thing you want me to talk about, you can put it there. So do the YouTube business, like the video, share it to your friends. And I'm going to recommend the video at the end of this one for you to watch. I would advise you watch it. And once again, if you need a complete Forex training, you can check the link in the description. I'm going to direct you to a complete Forex training, everything from the scratch, including everything you need to know: trading plan, trading journal, risk management, different strategies, SMC, ICT, live trading sessions, and everything. Check in the link in the description, and I wish you all the best. Go and practice. Do have a nice day.